Thanks to Tanya for getting us started today. Really excited to host this session for everyone. Tanya might have shared already, but this was kind of born out of our Slack random channel where we have our community of consultants that work with us at Tandem are in our Slack ecosystem. And somebody posted a question about incorporation versus sole proprietorship. I also have a sole proprietor consulting business on the side and have been thinking about incorporation. So selfishly, I'm very curious to dive in and learn more from our panel of experts. So we'll go to introducing our expert panelists and get started. We've got three panelists here today. We have Christine Holmes from Lawyers In-House, Mario Montigliani from Access Insurance Managers, and Ilnam Kim, who works in a couple different places, including doing work at Tandem. He also has his own tax practice where he provides services to small businesses. So really excited to have each one of you here. And I might just call on each one of you to maybe provide a little bit on your role and kind of the work that you do. So I will start with Christine, if you don't mind introducing yourself to folks here.
Sure, thanks, Renee. Happy to be in the hot seat and go first. Christine Holmes, founder and CEO of Lawyers In-House. So Lawyers In-House will probably, anyone part of the Tandem community will have no problem understanding our model. We are fractional general counsels, fractional chief legal officers. We are a virtual company with lawyers across Canada, the US, the EU, UK, and Asia. And really what we're trying to do, I started the company to make the legal profession better. Let's face it, it sucks dealing with lawyers. They're usually not very friendly, they're usually not very enjoyable, and they're way too expensive. So we were saying, how can we make that better? How can we make the client experience better? So we are a group of former in-house lawyers. So everyone has worked with businesses, everyone has been an employee in a company, so they're more pragmatic and focused. And then there's a selfish side to the company as well, which is trying to improve the legal profession internally to make it more equitable, to make it more inclusive, because I like to use the tagline, the legal profession, unchanged and unevolved since 1682, which is perhaps slightly pessimistic, but not completely inaccurate. So we're just trying to move the needle on that. We're trying to make it a easier, more flexible, better profession to work in, and then provide better client service externally. So we're full service. We do all sorts of things, including corporate. So we're just, Tandem is a great partner. We love working with Tandem and obviously have a lot of the same values and philosophies. So really a privilege for us to be here today. And I just wanted to acknowledge that I am in Hawaii. I have an extremely large birthday tomorrow, so I'm here to celebrate that. And I tried to find some land acknowledgements for where I am in West Maui, and I'm not sure if anyone knows the history of how Hawaii was sort of stolen from the native people by Americans. No offense if there's Americans on the call, but that's the truth. But I also in West Maui, where we are, is right near Lahaina. And so if where the fire station, the locals are mostly still homeless. So I'd also just like to take a moment on this call to acknowledge that. And for anybody who does have the ability to donate or assist in any way, I just really encourage you to do that, because there doesn't seem to be as much focus and help here as I would have thought as a state of the Americas. Anyway, that's an aside. Thanks for having me. I'm excited.
There's so many things that I would want to kind of dip into more, and thank you for giving that background on Lawyers In-House and also that that connection to the land and where you're calling in from. We appreciate so much that you're here, especially given that you're You're off in Hawaii at the moment, so thank you so much, Christine.
Thank you.
Ilnam, I was wondering if you would take a moment to introduce yourself.
Okay, thanks Renee for introducing. My name is Ilnam Kim. I'm a CPA with about 10-year experience, I think now. My background is in tax and audits for small to medium-sized businesses. So, and that's my CPA articling experience was about. I run into a lot of small business owners that are struggling with the tax planning stuff and bookkeeping and those services, those aspects. So I started my practice, my own practice, in order to, and also it's out of necessity that I've noticed that most like tax accountants don't really communicate much. It's very hard to reach them or like let alone like talking on the phone. So I provide my services uh, around those aspects where I can make things comfortable for clients to talk to me. And I just want to be able to explain things for the client, so that I focus on relationship building as opposed to file the tax and go away and I'll see you next year kind of thing. So yeah, so that's yeah, so let me know if you guys need assistance with that. But that's sort of my business model, so to speak. And I've joined this panel to share general guidelines and tips in this area, sole proprietorship versus incorporation, which is very, I get this question a lot as well. So hopefully this is helpful and very nice meeting with you, all of you.
Thank you so much, Ilnam. So nice to see you. And I can definitely attest to Ilnam's style of being very client focused and client facing. We've worked on a few projects here and there together during our time at Tandem, and he always like went above and beyond, in terms of being connected to the client, and the clients really appreciated that so much. So thanks for being
Thanks.
here, Ilnam.
Thanks, that's very kind.
Yeah, and Mario, I wonder if you would introduce yourself to the folks here today.
Thanks, Renee. Yeah, thanks for having me, inviting me. It's always good to share as much knowledge as possible for anybody that wants to understand a bit of the most boring subject in the world, which is insurance, let's be honest. So hopefully we try to make it somewhat exciting. Access Insurance is a full stop insurance brokerage. We do everything, but we really specialize in the commercial side of the insurance. So we do anything from construction, real estate, manufacturing, from sawmills to retail. So we do quite a bit in-house, but we focus on real estate construction. We do a lot of manufacturing, and then professional liability is the three main things that we do. Personally, my book of business is split between lawyers. So we do about 70% of the law firms in town. We do all their excess professional liability. And then my other part is the manufacturing side. So mills, energy, mines, and that kind of thing. So two very different things. So that's kind of who I am. And along the same lines as Christine and Ilnam, my whole take on what I do for clients is providing my kind of, if you want to call it a tagline. I don't sell insurance. I kind of help people buy insurance. So there's a lot of things that people don't understand about the industry. It's not their fault. I actually blame brokers, because a lot of the brokers go out there just trying to sell insurance. But my job is to educate people, advise them not just on risk, but how to best, go out there and achieve the best strategy to get the proper coverage and the best costs, obviously. So everything I do is on relationships, everything. So I've been involved with Tandem for several years, thanks to Sean Hodgins, and so yeah, it's been good working with Tandem, and hopefully I can give something back today to the people on the panel, on the guests. So thank you, and thank you for having me.
Thank you so much. I'm so excited to dig into it. We have one next slide before we get into questions, and then just to share, after we run through questions, we'll kind of open it up to questions from folks in the audience. I wanted to put in a disclaimer. This actually came about from a conversation that Ilnam and I had, I think, at our Christmas party. We were just chatting about this event and just about how when you're looking for professional advice, it is very specific to you and your business and what's going on with your organization. So we're going to be talking about things very generally, just like you would have your medical disclaimer to consult your doctor before undertaking any new diets or health things. Similar here, you're going to want to get your own professional advice aside from this call, but hopefully you'll leave with a general understanding and a bit more information than you did coming in. That's our goal here today. So we will jump right into it. I think we'll probably hide our slide deck and just have the panelists up, because it is just an open conversation where I'll be asking questions of each of the folks here. I think I did want to just start with a general question, and I'll let whichever one of you want to kind of jump in. Hopefully that's not too chaotic for this first question, but what do you often see from your professional perspective as usually the triggers for a consultant to start considering whether to incorporate? Because I think there are some certain pieces that somebody will hit in their business, and then that's often the trigger to start to have that conversation. So I don't know if anybody wants to just dive in, or if you Ilnam. Perfect.
I'll go first before I get freeze again and then get kicked out of the room or something, you know. I wrote down a couple things. I'm gonna look at the monitor here, but the first thing I usually ask is what's your income, like business income level? And by the way, I'm talking about consultant businesses. I'm not talking about, you know, Shopify based or anything like that. So but before I get into that, I would say for consultants, why don't you look at cost structure? So example, like if you have a lot of deductions, let's say you make $100,000 and you have 80,000 deduction, that leaves $20,000 taxable income, right? So when you have that sort of small business taxable income, and then incorporation doesn't really add too much benefits to it. But actually, this is not the case for consultants. Usually their gross margin is very high because you don't have any inventories or anything like that. So you would have like 80% gross margin. So let's just say you have $80,000, $90,000, or let's just say your overall income is $200,000, and then you have a huge amount of taxable income left. That's sort of big trigger for me. So I usually ask, how much do you generate as a consultant? And 100,000 plus, I would definitely flag that one. I would definitely go into that discussion after that. Second thing is growth projection. So you just gain like 3 major clients. Obviously, that's going to push taxable income out of something. And then the last thing I want to say, which Christine will probably go into, is potential liability. So this one, I'm going to get into it a little bit later as well on a different question. But if there's a need for protecting yourself from liability, personal liability, the incorporation would be a good answer. However, I'm going to go into section 160 later, but I'm going to leave to Christine here.
Yeah, Christine, I don't know if you want to jump in on that about the liability side. And I know we will get into that a little bit further on, but just generally, what do you see when people start knocking on your door about incorporation?
Well, it's funny because as a lawyer, they normally knock on our door to get incorporated.
Yeah.
So it's a bit of a different discussion than Ilnam has, because you're talking about what if. And to be totally honest, one of the first things we will all say on the corporate side is, have you talked to your accountant? And we will genuinely, honestly say, call your accountant. What is your accountant saying? Because it is so intricate linked, right? There's these, normally if I was speaking to the liability issue, I would be talking about the tax advantages, high level, certainly not as an accountant. Obviously, I'll leave that to Ilnam, and you're all accountants, so probably have a general understanding anyway. So the first thing, so usually people are coming in and asking, we're thinking about it. Is it time? Should I? And then we have that discussion of this is a financial discussion. This is a legal discussion. And at the end of the day, it's a personal discussion. It's a personal decision of where are you and what feels right for you. And I think the important thing to know is there's no wrong answer. Like there's no, if it doesn't feel right to you for whatever reasons, that's okay. It's something you can do later. I mean, would you want to incorporate and then unwind the corporation later? I mean, you could. I don't think you would regret it. I don't think it's one of those decisions that you would regret. But it is personal, and it's when it feels right to you. And because you are accountants, the liability isn't quite as beneficial as, and I say this as a lawyer who's also into the structure of a professional corp and a professional giving personal services. So we don't quite have the benefits of a regular person or a manufacturing company or other types of businesses who get to hide a little bit more behind what we call the corporate veil in law, which divides you as a legal person and the company as a legal person. So it's a little bit more nuanced for us professional services providers, but there's still benefits for sure.
Yeah, that segues really nicely. Mario, do you ever get people coming to you where you start to talk about this professional liability piece, and then that leads them to start thinking about, oh man, I'm a sole proprietor. Like maybe this is the time. I don't know if that, if you get sole proprietors coming to you talking about their insurance needs. And
Yeah, I mean, for insurance, that question really is somewhat irrelevant because it's more relevant for the other two panelists, which have explained it quite nicely in terms of some ideas. For an insurance company, whether you're a proprietor or incorporated, doesn't really matter. What really matters is what you do, how much revenue you generate a year, where you do it. So are you a consultant for, I have several policies for consultants that consult in the mining industry. They're geologists and go around the world doing rock samples. Well, that's one profile. Some of them are actual proprietors and some of them are incorporated. Doesn't really matter because the underwriter is going to rate that policy based on what they do, not whether they're a proprietor or an incorporated. Okay, so it's kind of irrelevant for insurance.
Yeah.
But in terms of the relevance is more along the lines of what Christine was saying about the corporate veil. There are some things that could pierce the corporate veil, as they say. So you do have some, protection or being incorporated for your liabilities because you're, sheltering. No, that's the right word, Christine. Sheltering some of your liabilities in a corporation that's personal. That's a legal question, but from an insurance perspective, it really doesn't matter, and the timing of it really doesn't matter. So yeah, it's a bit of an easier question on the insurance end.
Yeah, that's great. This is a great place to start. And Christine, I'll go back to you on a little bit around, because as you said, when people come and knock on your door, they've already made that decision, and it's really, I want to incorporate, what are the next steps? So can we talk a little bit about that administrative effort for somebody who is maybe I call them a single shingle consultant, so a one-person operation, because I think that's often what holds people back from taking that step, is they're like, it's just me. Is it worth the effort if it's just me and my individual business? So I'll hand that over to you.
Thank you. And I just want to applaud Mario for using the term piercing the corporate veil. I've never heard anyone who's not a lawyer say that. So well done, Mario.
I've read a few cases in my day.
Yeah. Well, that's almost sad because they're not much fun, but good for you. I'm sure it makes you very good at what you do. That's great. So Renee, great question. What I would always say to our business is I'm very about biases up front as a lawyer. I'm not that I'm here to sell you on it, but there are so many advantages, and in my opinion, there's more advantages than disadvantages. Now, I say that again with the proviso of it's a personal decision, and it is a financial decision. So as Ilnam walks you through maybe that tipping point of when it makes sense for you financially, the way I look at it, often, people say the disadvantage is you're creating a separate legal entity. So you're no longer just you're a legal entity. You're still going to have your personal tax returns and all of your personal deductions. Now there's a separate legal entity that you've just created. And so that legal entity has filings, it has tax returns, it has all sorts of things and paperwork that you'll have to do. And to create that entity, obviously there's paperwork and a legal process. Now, in my opinion, it doesn't have to be super costly. I don't know how much Ilnam charges for doing a tax return, but it doesn't have to be super costly. And for incorporation, as we say, especially to our sole proprietors or sole shingles, as Renee put it, you can do it yourself. There's all sorts of programs online where you can go and very reasonably priced. I think sort of 4 to 6. It depends on what province or territory you're in, because it's different. Or of course you can incorporate federally. Those are, and I don't know if you've thought of those differences. If you incorporated, let's say in BC, just so you're aware, that doesn't mean you can just do business in BC. You are still able to provide your services wherever you do. A couple of quick things on that. Sorry, Renee, as an aside. One of the things we always say is, where do you provide your services? If it's mostly across Canada, or certainly internationally, I'm not saying that someone in Germany wouldn't know what Saskatchewan was, but there's a possibility they don't. So you may want to be a federal, you may want to be a Canadian corporation if you're doing business across Canada, or definitely internationally, as opposed to a Manitoba corporation or an Ontario corporation. So you have those options, but it's not a ton of work. You could do it yourself. And the thing that I always say, if you are part of a professional organization and you have to organize as a professional corp, that is a little bit trickier, and you may want to make sure you contact a lawyer for that, because whatever your regulatory body is, whatever province or territory, is going to have certain restrictions on what you can do, on what you can't do, who can be a shareholder, who can't be a shareholder, your name. Just as a little anecdote, lawyersandhouse.com is our name, and the Law Society shot me down on that 5 years ago when I went to them and said, and they said, this will be confusing in the marketplace and nobody will understand. And I'm like, confusing against what? Like Tories, McCarthy's, like who is it? And so again, it was lawyersandhouse.com, and I went back to them and said, okay, I'd like to incorporate LIHDC Professional Corp, and this falls within all their guidelines. And they called me and they said, we can't refuse the name, but we know what LIHDC stands for, and we are warning you, I can have a trade name and I'm operating under it. Anyway, they've never come back, but regulatory bodies are, this is being recorded, so I'll say sometimes not easy to deal with. But if you are governed by a regulatory body, you probably do want professional help to incorporate. But if not, you can do it yourself. And the thing to understand is, if you screw it up, a lawyer can fix it later.
Mm,
Yeah.
that's really helpful.
Can I add to that?
Yeah.
Because Chris, that's a very good point. As a CPA, I had to go through that, and there has to be, so in your incorporation articles, there has to be specific articles that have to be included. So my suggestion is go talk to a lawyer like Kristen. If you're doctor, lawyer, engineer, or CPA or so, because it's not easy, because you have to follow bylaws, and then otherwise they don't give you the thing, and it lets you incorporate, I mean, as a PC. The one last thing I wanted to add to Section 160, the piercing of the corporate veil, is that in simple terms in taxes, the sales taxes and payroll remittances, those are crown debts. Those are like, you're not protected. Like CRA will come after you. So as a person, personally, they come after you. So even if you're incorporated, it doesn't matter. So there was actually a very recent case, interesting case, tax case in Alberta. So this guy owed a bunch of money to CRA, shut down the corporation, so close it down, right? And then CRA sort of wanted to issue the debt, and then the judge granted that, and they revived this dead corporation in order for CRA to issue tax debts. And now what happens after? Of course, they come after the person, director, person. So, yeah,
it's like a zombie corporation back from the dead for CRA to collect its piece of the pie.
Exactly.
So interesting. Yeah, so much to dig into here. I wanted to chat, Ilnam, about a little bit more about this tax implications, advantages. So I know, yeah, I've got some questions here on the tax side, but I'll kind of hand it over to you because I suspect you already have some of the points that you want to hit on this framed out. So yeah, talk to us more about the tax side of things.
Okay, I'm gonna get started here. I think I should. Okay, so one thing I wanted to say first is actually maybe the last. I'll say it. So I'm just gonna show the this slide I put there, just put visual there. So you see that screen, the spreadsheet, right? So this is basically, with I guess the core message of sole prop versus incorporated business. Let's say assume that, so this left at 2125 means it's personal tax, so not incorporated, and then the incorporated on the right side. So let's assume 150,000 business income, 30,000 business deductions, and now you have 120,000 taxable income. I run quick calculation, you have $34,000 taxes to pay total. And whereas you're an incorporated business, you have a corporate side, T2, and T1 is personal. So what that means is we're assuming the same income and deductions, but we're paying the director $100,000 as a personal income. That's what it means right there. So, but then business income exactly the same in deduction. So when you run it through like that, now you have $22,000 total taxes to pay, which is about $12,000 savings right there. That's already quite enticing to incorporate. This is one scenario, by the way. I'm ignoring a bunch of details, bunch of and also if one number changes, everything changes, right? But this illustrates the benefits of incorporating versus sole proprietorship. Okay, just as a simple picture. What you do with that $12,000 tax savings is another thing that I advise clients on. So, or even actually, Mario will go into insurance, tax planning, that kind of stuff as well, right? So that's what 12,000 is all about. And the couple points I want to make on this one is be very careful incorporating as a consultant. So there's a personal services business, PSB consequences. So CRA project has already begun, and they're in the phase 2, which is like catching people now. Okay, and the first was educating people. And what they found out from the education phase is that 64% of corporations interviewed, they are in violation with this. So what that means is you're an incorporated employee, you're supposed to be an employee, but you're not. So you just went ahead and incorporated yourself as a consultant. But technically, that's you only have one employer and you're a PSB. So when you're PSB, your benefits of having a corporation, it just diminishes, right? So you don't get the small business deduction. You're taxed at the full rates, which is like close to 50%. They only let you deduct wages, just like a personal individual tax. So it's very bad if you get caught. And there are a lot of details with this. Maybe Christine can help you guys with that. But consultant is notorious for this, or very risky for this, especially when you have working for like small number of employers or clients, or one employer or one client. So be very careful. Going into sole proprietorship versus incorporation, tax implications, it's mainly for tax deferral and integration. So tax deferral means there's a timing. So like for sole proprietorship, you gotta pay taxes right now, like this year. Okay, that's it. There's no deferral possible. But for incorporation, you may do that, but you may not do it. You may do it for the next year, example, right? So there's a thing called double wages that sometimes that are possible. Double wages means you're deducting wages twice for a given year. So which is not really possible for as long as the subsequent wages are paid within 180 days. So that kind of stuff is available for corporations. The integration, it simply means rather than simply managing a personal tax, now you have personal tax and corporation tax. You can sort of optimize those two cycles as opposed to just managing one, so which gives you more opportunities, basically. So for sole proprietorship, you're getting taxed immediately, but business deductions and sales tax and employer health tax, these things are the same, right? There's no differences. So it's all about tax planning opportunities. Incorporated businesses, they get small business deductions. You got tax deferral due to timing, and you can do income split now, which is tricky because of TOSI implication, which means like, if you don't do proper splitting, then they come after you and tax you at the highest rate, especially if the owner is not active in the business. And there's a Part 4 implication for passive income. You have investment in a business, as well as active business. Then that passive income creates Part 4 taxes, which is a lot higher than small business rate. So that kind of stuff. And we talked about the Section 160 director's liability. And we should, okay, so when is it ideal to incorporate? That's the last thing I want to sort of touch up on is, like I said, income level, growth projection, the needs for potential liability protection. And other than that, it's going to come down to your personal income needs. Like if you don't need a lot of personal income to live off, that's very ideal to incorporate, because the retained earnings will grow at a faster rate because you're getting taxed at a lower corporate tax rate than compared to personal tax rates. And the next thing I want to say is the needs for tax planning. So this is when Mario comes in, where he can do like advanced tax planning through insurance, and then there's a CDA implications, and there's a rollovers, there's a share reorganization, flexibility of business sale. So you can sell the shares versus sell the assets. And it's very important that you sell the shares, example, to gain access to lifetime capital gains exemption. So that kind of stuff is a very advanced, high level, which requires Christine, Mario, all at the same time. So and then so when you have those, like when you're gonna sell a business or succession planning, that kind of stuff happen, then you definitely need to have incorporated business. This is not possible as a sole prop, really. And the one last thing I want to make a note on this is that be very careful. Sort of, I noticed like many bookkeepers jumping into corporate tax services. I find it very risky because this is not simple like a personal tax filing. So T2 bleeds into so many tax areas, and if you screw up on one of those things, and then the dollar value is so significant that even if, and then they correct the catch-up for 3 years, let's say the statutory limit 3 years, then you're looking at like 5-digit liability, and the client has to pay for that, plus negligence and all that stuff. So it's a very it's not easy. And if you never worked in a CPA firm or like have extensive experience in tax, my suggestion is leave it to professionals, but or like Christine, because there's a lot of legal things that you have to think about. It's not simple. So so when it comes to mechanics, timing, reconciliation, these things matter, because sometimes it's easy to feel like it's simple to just file the tax and let the software run it, but that's not the case, because in the background there's so much knowledge that has to go into it. And one last example is, before, when I was working in a CPA firm, to file one tax form we had 10 spreadsheets that back up that one form. So that illustrates the complexity to it.
I would say I was definitely in the camp of like, this seems really straightforward. And then I'm jotting notes off to the side about PSBs and like, oh, wow, this is a lot here to dig into. Christine, just kind of going back to you on the legal side, I guess, can we talk a little bit more, dive in a little bit more deeply on the risks of not taking that step and going to incorporation? It sounds like there's a lot there, particularly when we're talking about consultants. Like I know Ilnam was saying, if you kind of work just for one client, like there are just some things to consider. So yeah, what would you kind of have to share with us on the risks and benefits?
Well, let me address that point, the last point you
Yeah.
just made, Renee, because I do see that there was a question in the chat about it as well. And from a legal perspective, in my opinion, CRA is less concerned with if you're incorporated or not incorporated, if you're working for a sole client, and they're more concerned with are you actually they're more concerned with control. They're more concerned with what is the nature of that relationship, and are you if you've got one client and you're doing all of these services for them and you have to abide by their policies, and maybe they issue you a laptop and a phone, and you know you're their fractional whatever. If there's not a lack of control on your part, it's going to look like you're an employee. And then that's when they can come and reassess and relabel that relationship. And then that's when there's all sorts of crazy tax implications. Of doing so. So really it's about control. It's about, do you have the ability to say, by the way, I'm off for the month of February. Are you using your own tools? Are you using your computer? Are you using your phone? You have the ability to control the work, turn down work, the ability to hire somebody to subcontract the work, do it on your behalf. These are all sort of basic types of things. And CRA is going to be looking for that. So you just really want to be careful. Having multiple clients for sure helps, but it's not a death sentence if you have just one necessarily, but just be really careful. And it isn't about the name of the agreement. It doesn't matter if you signed an independent contractor agreement. You can't just hold up that title and CRA will go, oh, okay, we see. They're going to dig deeper because, you know, let's face it, the country's broke and they're trying to get whatever penny or dollar they can. So really that's something you want to be careful of. And it really is about control, and you need to look, feel, sound, smell like an independent entity who is not an employee, who is not treated like an employee in any way, shape, or form. So if you start to feel that that's a bit of a gray area, then you probably do want to reach out and have some conversations. As far as the advantages from a directly legal liability standpoint, and I know Mario will touch on some of this too, and Ilnam's already said it's all of any money owed to the government, right? So it's withholding taxes, it's excise taxes, it's payroll deductions, it's GST, HST. That's all going to have, as a director of the company, you will be personally liable for that. If you are in a regulated industry, if you are a professional corp, you are also going to be personally liable for negligence or malpractice. And whereas a regular owner, director, shareholder wouldn't have that necessarily. There's ways that if you're grossly negligent, that has in the past allowed for some piercing of the veil and liability to directors and shareholders. But it seems unfair, but you have to remember, it wasn't that long ago in this country that if you were a professional, you couldn't incorporate at all. So what they saw is that it's you personally providing these personal services that you are a professional of, so you should not be able to hide behind a corporation. So it's great that we can incorporate and we can have the tax advantages that Ilnam has mentioned. so the, a little bit of a caveat there, but really to me, so absolutely, especially if you're not part of a professional corp, there's still advantages. If someone is going to come after your company, they're still coming after your company, right? And your company's assets. You have to fight and prove to pierce the corporate veil. You just don't get to walk up and say, I'd like to, move past the veil and I'd like to go after Christine Holmes' house and her RSPs and her car protection for you. And if you're not part of a professional corp, then there's lots of protection there. So that's important. Protect your house, protect your family, protect what you've built up as a person, and then they can come after you as a corporation. It's the corporation that's liable. It's the corporation that will buy insurance from Mario and have the protection that it needs. So that's the real benefit of having two separate legal entities, that all of a sudden you as a person aren't on the hook for whatever might come after you. But I'd also encourage you to think of sort of, they're not really legal, but other benefits, such as the perception of sophistication and credibility, because there is, if you're an incorporated company. And so that's a real thing, and you'll see that even to get funding. Banks would much rather you be in a company than, Canadian banks aren't going to give you money anyway, but they'd much rather you be incorporated than not. And if you're going to get investors, well, what do investors want? Investors want equity. They want shares. You don't have any shares to give them. No one's going to invest with you. So there's other reasons to think sort of reputational, long-term company, where you want to go. The continuity of the company. As Ilnam said, you can sell your shares. Maybe you decide you want to get out. Someone can buy the company, but the name of the company, the brand of the company, all of the goodwill is going to be there. And so you're going to get paid more for it, and more people are going to want to buy it so that they can continue it on. And all of that can happen behind the scenes. And people may not even know, where you just say, oh, someone is stepping in to do the business, or maybe you've already personally stepped away. So there's a lot of, advantages in the marketplace to being incorporated that aren't the same if it's just, Christine's whatever personal services. And then also, I would say, if you join with someone else, if your business grows, or you decide to add on a partner, that's when things can get really tricky. So I would say you would definitely want the benefit of being incorporated where your shareholders, or where, there's a bit more of a legal landscape about what can be done, what should be done, what will be done, with the assets. And so you're less likely, I think, partnerships, scare me a little bit as to if you get into disputes, or who owns what assets of the, you want everything to belong to a company, in my opinion, when there's more than one person involved. So just something to think of as you grow.
Yeah, that's great. I looked down at the clock and I was like, how is it already 12:47? I feel like we could kind of deep dive into so many of these pieces. And it's just, there's so much to get into. Mario, I was hoping we could talk about the insurance side. Kind of some questions about, like, when do I need errors and omissions or other sort of professional liability insurance, as well as there's professional designation insurance and also that whole piece of things. So I'll hand it over to you to kind of guide us through that side of things.
Well, when you need it is basically when you start. It's not a question of whether you're proprietary or incorporated. It's when you start doing business. So when you start doing business is when your exposures start, accumulating, for lack of a better term. So you would need it when you start. A basic E&O policy. There's different types of E&O policies. There's a miscellaneous. There's one tied specifically for the financial world. Obviously, there's one for lawyers that's specific. It really matters. It really, when you start working, is when you probably should look at a policy. A lot of the questions I get are, well, I'm only doing 150 grand, so I don't really need to spend you know, a couple $1,000s or whatever it is on a $2 million E&O policy. And, you know, my answer is, well, everybody thinks they're never going to get sued for anything, but sometimes it happens. And the lawsuit could be maybe frivolous or completely wrong. But at the end of the day, you still got to defend yourself. And so you have lawyers' fees to defend yourself, right? That could be thousands of dollars, depending on the size of the claim and the complexity of the claim. My answer is, do you want the insurance policy to pay for that, or do you want your $150,000 that you're trying to make to pay for that? So there is value in having a policy, even though you're making very little income, to protect yourself from those expenses where somebody just all of a sudden thinks, you gave me some really bad advice and it cost me money, right? That's so if there's a financial impact to your clients for the professional service that you're providing, whatever that may be, they can't sue you. It could be completely BS, right? But at the end of the day, you still got to defend yourself. You got to enter a defense, you got to go to a lawyer, they got to file and all that stuff. It could be small claims, it could be Supreme Court. So there's value there just alone. And you can take a chance and just, I have proprietorships that sometimes come to us. They've been working for 5 years and they have never had insurance. So, you know, you're taking a chance at the end of the day, right? Insurance is a promise to pay. You never think it's going to happen. But, you know, at the end of the day, it's about protecting your assets, right? Your company assets, your personal assets, whatever those may be. In terms of, you know, getting back to some of this corporate veil stuff, there are some policies that you can buy that so when you're whether you're incorporated or proprietorship, you'll have an errors and omissions policy. It'll be in the name of that proprietor or the company. There are some exposures that you personally get held liable for, things like wrongful. Now, proprietorships generally don't have employees, so this is not really an answer for them. If you're incorporated, just because you want to be incorporated to take advantage of some of the stuff that Ilham talked about on that chart, then, you know, it wouldn't apply to you. But generally speaking, there are things like wrongful dismissal, harassment issues, management issues. It's called a directors and officers liability policy. I hate that word because it's actually a management liability policy. It's not, you don't have to have directors and officers. It's a management. So in your managing of the company, there are exposures that your general liability policy or your errors and omissions policy will not cover. Okay. So you got to think about that too. Now, if you're only a one-person show, then you probably don't need it. So there are certain exposures as you continue. You might get 2 consultants that work with you part-time. You want to think about things like that. If you are a consultant and you work for one company only, so let's say you work for Tandem only, I'm not going to get into the tax and all that other stuff because that's not my world. I don't do tax planning or anything like that. But some very important things to think about that Ilham was talking about. If you work from Tandem only, you can be included as an employee under Tandem. But if you're a consultant and you're doing work, whatever that work may be, with several other companies, Tandem insurance will not cover you. You have to have your own, because an underwriter wants to know what the exposure is. So if you're working for Tandem and then you're providing, say, financial modeling or analysis for a mining company, for a public mining company, those are two very different things. And insurance company is not going to give you an E&O policy, or the Tandem's insurance company is not going to want to be exposed to what you're doing outside of Tandem, for example. Okay, so that's kind of the line we draw. Is can I be included? Because I get this. Can I be included in the company I'm working with? And the question is, how many other companies are you working for? If you're working for others, the answer is no. If you're only doing it for Tandem and you're set up like Ilham was talking about, you're just incorporated, take advantage of 12% small business tax, then yes, you can. And then the other issues he talked about, that's not my role. So that's another thing to think about. Protecting yourself, again, whether you're incorporated or a proprietorship, based on what you do, one of the ways you can protect yourself is obviously contractually, to see how you can transfer your risk to others, to the people you're working with. And those contracts obviously should be reviewed by a lawyer. Hold harmless agreements, indemnification agreements. Those are things that you would want to have in place with your clients to transfer some of the risk or limit your liability somehow, in terms of protecting yourself. And then, protocol, just basic business protocol of, for example, I'll use the mining industry as an example. If you're a consultant and you're doing analysis on rock samples, if you're providing that and the company is relying on that advice to go out and raise money, that's a much different exposure than just saying, here's my idea, and the people internally in that mining company do the rest of the work. So those are a lot of the questions that we ask. Financial people that are doing consulting, what kind of consulting are you doing? Are you actually providing, debt analysis or equity debt? Are you raising debt and equity for them? Sometimes that happens too. How far down the line are you doing this analysis? How much of the information is the company you're working for, doing the service for, relying on that information? So all those things need to be understood, so the insurance company can properly underwrite your risk. So a good solid agreement as a consultant is really important. So and don't ask for that agreement when they ask for insurance. So if Joe Cooper wants an E&O policy, one of the requests we'll get is, can I see the contract with his clients?
Mm-hmm.
Sometimes they don't have one, and the underwriters are not really that. You might get a policy, but they're not really interested as much because they're kind of just throwing a policy out there, right?
Yeah, the risk on their side is a lot
and they don't
higher.
want to do that. Yeah. So, what do you do? You just, you're just doing business, and there's no terms and conditions with your client. So they'd want to see that. It doesn't have to be fancy. I've seen one-pagers that do the trick, right? But you do want to consult with your lawyer on that, for sure, right? Make sure the language is proper and it's tight. So those are the main things that you should be looking at, regardless of whether you're a proprietor or incorporated.
I know that there are questions that have come up in the chat. I think what we will probably end up doing is gathering those questions and sharing that with our panel of experts, and maybe feeding some of those responses back to the folks who asked, or as well with folks who are in attendance today, because I don't think we'll have time to get through them. The other part that I just wanted to share is, I know for myself and maybe others, it's like I have a healthy fear maybe now that I didn't have before stepping into this call. And I know that Tanya kindly posted the contact information for Christine, Mario, and Ilnam, hopefully, and if not, we'll add it there, so that folks can reach out if they do need advice and counsel on your specific scenario. So many questions, which is, I think we knew when we saw the chat about this discussion that there was a lot of interest and appetite from our community on this topic. So I just appreciate so much each one of you taking your time out today to share just a little window into your world when it comes to incorporation through your professional lens. I know I got a lot out of it, and maybe I'll hand it over to Tanya to close us out, since she opened us up here today.
Wow, thank you, Mario and Christine and Ilnam, and taking your time out for us today. So many questions and so many individual ones. So take the opportunity to, one, learn for yourself and learn for your clients, and learn what's still gray, and probably need some friends to chat through and get and figure out what your actual question is, so that you can deliver the service that you want to be delivering into the future. So holding that in place as well. We will reshare the recording if you signed up via Zoom to all the registrants. We'll be doing a blog post summarizing a few things that we learned. If it's available to you to share back some feedback about what you learned, what you want to still learn about, we'll capture all the questions that came in the in the chat and do our best to circulate and answer as much as we can. But we will be convening more community conversations. If you have a topic that is burning or really feel like is worth some time for us to dig deeper into, let us know in Slack or by email, however way you like to reach us here at HQ. And we'll put it on the calendar and make sure we dive a little bit deeper in with you all, because there's so much to learn. So thank you, everybody. Happy 2024 to some amazing activities together this year.
Thanks, everyone. Appreciate it.
Nice to see
Thank
you all.
you.